Okay, let's take a run at assignment 2.1. This is kind of a fun one because you're doing a lot of calculations. First of all, this is the scenarios. These are the scenarios. And then I ask a question. We ask a question about each one. So the first one is, what is the total amount of dividends declared for preferred stock? Well, if I go up here and I'm looking around, I find that I have 1,050, right? So I have 1,050 stocks times, what is their par? And that's 102. So that's going to give us our total preferred stock. Then I'm going to multiply that total times the 4%, and that will give us our dividend for that one. Now, you're going to do the same, similar for common stock, only common stock, it's saying they're paying 55 cents a share, so that's 95,000, right? Times 0.55. And that will give you your dividends that have been declared. And then I ask a question, which is really kind of interesting. You have to say, well, why do they do that? Why are dividends declared in 1 month and paid at a later date? The textbook does a good job of explaining that. If you want to go out and research a bit on the internet for it, that's good too. But it's always good to know why accountants do what they do. So here's a chance. Then they want to know, we did a stock split, and the stock split was right here, June, and we had 95 shares, and 95,000 shares, and they split them 2 for 1, which means they doubled them. So how many shares are there now available? So that would be right here, so that's 95,000 times 2. Remember that total because you're going to need them. Now, the next thing that they do is they declare a 25% stock dividend. How much is that? How many stocks are involved in that? What is the total number of stocks distributed from the stock dividend? Now remember the split, okay? So what are the total number of stocks? So you're really going to take that 190 times that 25% to come up with the total number of stocks. So now remember that, because that's going to add to your total of stocks. And you may need that later on. Next thing they do is they buy treasury stocks. Now, what are treasury stocks? What are they used for? So what is treasury stocks? What good are they? Explain to me what treasury stocks are. Explain to me as if you were explaining to your somebody who you're explaining a balance sheet to. Okay, now comes an interesting question. When you're selling treasury stock, what will be considered the treasury stock's par value if sold? Okay, and in this problem, what is the par for the treasury stock that you bought? And you're going to have additional paid-in capital at that point. So will there be additional paid-in capital from the treasury stock for the sales on the 8th? Will there be? And how about on November 30th? So you'll need to look in the book and see how they handle treasury stocks as far as the entries and the amounts. Interesting little problem. And I've kind of given you a little table down here to help you keep track of things. So in the next problem, this one has an awful lot of information in here. So what I advise you to do in any problem like this is I separate this stuff out so I can keep track of it. So first one is I have 30,000 shares of $2 stock and 40,000 of common. Okay, and then they tell me the outstanding, okay? And then they start giving me all this information about income. So let's separate that out so I can keep track of these numbers. And then they've declared this dividend. And let's do that. Okay, so now I've got everything separated out, and it's a little bit easier to read as we go down. And they want us to create an earnings per share for 2011. Okay? And then at the end, they want us to show two ways of reporting that restricted, right here, the restricted retained earnings. Okay? So here we go. Let's look at this. They want to know earnings per share from income from continuing operations. And all of these are reported, let me see, all income and loss amounts are net of income tax. This means we don't have to worry about that right now. So, first of all, income from continuing operations is this one right here, $104,000. Now, what is our formula or our equation for earnings per share? Well, it's going to be net operating income minus the preferred dividend divided by the average common stock. And they tell us that the outstanding stock totals 40,000 throughout the year. So that's its average. So all we have to do is plug numbers now. So this is 104. And how much did we declare in dividends? Does it tell us declared preferred dividends of 60,000? So that gives us 104 minus 60,000 divided by what? 40,000. That gives us our first entry for the earnings per share. Then you're going to go down and you're going to look at the gain on discontinued operations, which was $20,000, right? And that's literally going to be divided by that 40,000 shares. And we'll make an entry here. And then you'll add these two to give you the earnings per share on income before extraordinary earnings. You will then move down to the extraordinary gain, and that was right here of 10,000. And that will be divided by the 40,000 to give you your earnings per share for the extraordinary gain. Then you will add up this and this, and it should equal $1.85 earnings per share. And then finally, there are two ways to show restricted or appropriated retained earnings, and either is quite allowable. So method 1 you'll find on page 697. You'll explain what that one is. And then method 2, I've given you a partial stockholders' equity to show what that may look like. And that wraps up earnings per share for assignment 2-1. So holler if you have questions. Thank you.